Welcome back to Investing Talk Podcast. So today we're diving into MicroCloud Hologram. We're going to take a look at some interesting stuff happening with this company, ticker symbol HOLO. You sent over some materials, and we're going to kind of unpack it all, see what's what. I think what's interesting here is we're going to look at their holographic tech business, how their financials are doing, some moves they've been making, strategically, and then also what's going on, with the charts.
Yeah.
So quite a bit to cover. So why don't we jump right in? What really stands out to you initially about this whole MicroCloud hologram situation?
Well, I think what's really interesting right off the bat is you've got this company, right, working in this super futuristic space, holographic technology.
Yeah.
But then you look at their financials and the strategies they're using, and it's kind of all over the place, big swings up and down. It makes you wonder, what's the connection, between those two things? The future tech and the wild ride,
I see what you're saying. It's like they're playing in this cutting edge field, but then the numbers are telling a different story.
Exactly, yeah.
So let's actually start with the basics then. Let's get a grasp on what MicroCloud Hologram actually does.
Okay, yeah. So basically they're a tech company, right, focused on these holographic services. And they kind of have two main areas, two segments of their business.
Okay.
There's holographic solutions, which is basically them creating and selling their own holographic products. And then there's holographic technology service. So that's where they're providing the tech, the services for other businesses to actually use holography.
I see.
So kind of they're building the tools and the platforms for others to get in on the holography game.
So they're both a player and they're providing the tools for other players. That's interesting.
Exactly. Yeah. So some of their specific offerings, they've got this thing called holographic LiDAR. Basically, you can think of it like they use holography to create these really detailed 3D images. It's used a lot in autonomous vehicles, things like that.
Oh, wow.
Yeah. And then they also do digital twin technology. You ever heard of that?
I have heard that, yeah.
So that's basically creating these virtual replicas of real world stuff like objects or even whole systems.
Well, interesting.
Pretty wild stuff.
Yeah.
And then also intelligent vision systems for vehicles, which is, using holographic tech to make vehicles, see better, perceive their surroundings better.
Yeah.
Yeah. So pretty advanced stuff they're working on. And just as a reminder, they're based in Shenzhen, China, listed on Nasdaq Q.
Right. And when we look at their stock performance, it's like the numbers are kind of all over the place. I mean, right now it's hovering around 95 cents, but just in the past year, the lowest it's been is 67 cents, and the highest it reached was $105.60. I mean, that is a huge difference. That kind of spread, it just screams like, there's a story here.
It totally does, yeah. That huge range, that's a classic sign of volatility. The stock price is going up and down like crazy.
Yeah.
It means investors are all over the place. Maybe there's some big news that's making people buy or sell like crazy. Or maybe it's just speculation, people betting on what they think might happen.
Right. And the thing is, it's so much closer to that 52-week low now, right? So that suggests that it's been really trending downwards from those previous highs.
Yeah, exactly. And it makes you think, what happened? What changed?
Yeah.
Why did people lose faith in it,
And the volume of trading is high too, right? It's been over 136 million shares recently. So what does that tell us, especially considering that the price has been so volatile?
Well, high volume usually means that the price moves we're seeing, they're not just flukes, when there's a lot of shares changing hands, it means a lot of people are buying or selling. So if the price is dropping and the volume is high, that means a lot of people are selling, right? And they're selling because they really think the stock is going down.
Right. So it reinforces that downward trend.
Exactly.
So let's dig into the technical indicators a little bit here. We see that the 20-day moving average is around $1.57, and the stock is currently trading below that. So for our listeners who maybe aren't as familiar with all these technical terms, can you explain what that generally means?
Sure, yeah. So a moving average, it's basically like taking the average price of a stock over a certain period of time.
Okay.
So in this case, 20 days. And it helps us to smooth out all the little ups and downs and see the bigger picture, the overall trend. So when the price is below the 20-day moving average, it usually means that in the short term, at least, things are trending down.
Okay.
It's like the momentum is shifting downward.
Right.
And considering how crazy that 52-week range is, it's pretty likely that the price is also way below the 200-day moving average, which is, a longer-term indicator. So that would also suggest that things are looking bearish from a technical perspective.
Okay. And we also have the Bollinger Bands here. The upper band's at about $2.44 and the lower band's around 90 cents. And, the price is currently pretty close to that lower band. So what can we take away from that?
Okay, so Bollinger Bands, they're basically a way of measuring how volatile a stock is, like how much the price swings up and down. So when the price is near the lower band, it can mean that the stock is oversold, meaning it's dropped really fast and really far, and maybe it's due for a bounce back. Statistically speaking, there's a good chance it might go up from here, but, it's not a guarantee.
Yeah.
Like, just because it's near the lower band doesn't mean it can't keep dropping,
Right.
It all depends on how strong the selling pressure is.
Right. So based on all these signals that we're seeing from the charts, the recommendation seems to be to just hold, and to watch that support level of 67 cents. Why is that level so significant?
Well, that 67-cent level, that's like the lowest the stock has been in the past year. So if it breaks below that, it could be a sign that things are really going south, Like it could trigger even more selling. So it's important to keep an eye on it. And the reason the recommendation is to hold is because the charts aren't giving a clear buy or sell signal right now.
Yeah.
So it's better to just wait and see,
Okay. Makes sense. So let's move on to the company's financials now. Their 2024 revenue showed some pretty impressive growth, actually. They had a year-over-year increase of over 42%, reaching 290 million yuan, which is roughly 40.76 million US dollars. And their service business revenue grew even faster. So that sounds pretty encouraging, right?
Yeah, definitely. When revenue is growing, especially in their main service area, it usually means that people are buying what they're selling. There's demand for their products and services. And the fact that their service revenue is growing even faster than their overall revenue, that's a good sign too. It means that part of their business is really healthy and expanding.
So that's a positive takeaway. Another interesting point is their cash and cash equivalents. They had this huge jump, over 575% increase, bringing them up to 851.47 million yuan, which is about $118.45 million.
So that's a lot of liquid assets, right?
That's a ton of cash, yeah. It gives them a lot of options. They can use that money to invest in new projects, research and development, maybe even acquisitions, who knows. But the question is, where did all that cash come from?
Right.
Like, was it from investors? Did they sell some assets? Or maybe their operations are just generating a lot of cash flow now, even though we don't have all the details on their profitability yet.
Yeah.
So figuring out where that cash came from is going to be key to understanding what they might do with it in the future. Right. But when we look at their profitability, it's a little bit unclear. We don't have all the specific numbers right now, but we know that in a previous period, they had a negative pre-tax profit margin. It was negative 14.7%. So that's definitely something to keep in mind, alongside that revenue growth.
Absolutely. It's great that they're bringing in more money, but ultimately a company needs to make a profit to be successful in the long run. And that negative margin means that, at least at that point in time, they were spending more than they were making.
Yep.
It could be because they're putting a lot of money into research and development, trying to stay ahead of the curve in this cutting edge field. Or maybe their marketing and sales costs are really high. Or, there could be other reasons too.
Right.
But without more up-to-date information, it's hard to know if they've been able to improve their profitability since then. So investors are going to have to watch their future financial reports really closely to see if they're moving in the right direction.
Right. Now let's talk about some of these strategic moves they've been making. They invested a pretty substantial amount, up to $200 billion, into Bitcoin and cryptocurrency-related securities derivatives. And they're also actively developing quantum-related technologies. So what do you make of these ventures outside of their core holography business?
Well, I think it's pretty clear that they're not afraid to take risks,
Yeah.
That Bitcoin investment, that's a huge diversification. Crypto is notoriously volatile. It can go up or down like crazy.
Yeah.
So maybe they're trying to use their extra cash to get some bigger returns, or maybe they just really believe in the future of blockchain technology,
Yeah.
It's hard to say for sure.
Yeah.
And then the quantum computing stuff, that's really interesting too. They're developing this quantum asymmetric consensus chain algorithm based on the Bitcoin blockchain. It's a mouthful, I know.
Yeah.
But basically, it shows that they're thinking long term. They're trying to be at the forefront of these next generation technologies. It makes you wonder if they see some kind of connection between their holographic expertise and these other fields.
Yeah, like some kind of synergy there.
Exactly, yeah. But
Yeah.
it's not immediately obvious,
Right. We also saw that they had a pretty significant drop in revenue back in 2023 compared to the previous year.
Mm.
So how does that factor into our understanding of their recent growth, considering that they've had this decline in the past?
Well, it's definitely something to consider, right? Like the growth in 2024 is impressive, but it's coming after a year where they actually lost ground. So it makes you wonder if this recent growth is a real sign of a turnaround,
Yeah.
or if it's just a rebound from that really low point in 2023. It just shows how important it is to look at a company's performance over time,
Yeah.
not just focus on one good year or one bad year.
Right. To get the full picture. So even though their performance has been a bit up and down and they're making these kind of diverse moves, strategically, analysts are still saying that MicroCloud Hologram is a company to watch in the holography space.
Yeah.
They're getting recognized for their technological advancements. What are your thoughts on that?
Well, I think it means that at their core, they're doing something right. Like they're developing some really innovative technologies in a field that has a lot of potential and people are taking notice.
Yeah.
But the fact that analysts are also cautious, it probably reflects the risks involved, right? The stock is volatile, their profitability isn't consistent, and these new ventures they're pursuing, they're unproven. So there's a lot of uncertainty.
Right. So it's like there's potential there, but also potential pitfalls as well.
Exactly.
So I think looking at MicroCloud Hologram, it's kind of a mixed bag, right? You have this company in a really exciting field, with some strong recent growth and a lot of cash on hand. But then you also have to consider the lack of clear profitability, the revenue decline they had before, the volatility of the stock, and these strategic moves into areas that are quite different from what they've been doing.
Yeah.
And the charts right now are suggesting, like, proceed with caution, So understanding all these different pieces, it's really crucial for anyone who's thinking about, investing in this company or just following their story.
Absolutely.
So hopefully this breakdown has been helpful for everyone listening. And if you found it insightful, please subscribe, like, and comment.
It really leaves you with something to think about, How do you evaluate a company like this? They're growing in this cutting edge field, but their financials are all over the place and they're making these big bets outside of their main area of expertise.
It's a tough one, for sure. Yeah, it definitely is. A lot to ponder there. Thanks for breaking it all down.
You got it.
We'll see you next time on Investing Talk Podcast.